Okay, welcome to ActivTrades News. This is a special Brexit or EU referendum edition, and I'll be speaking to a highly famous and renowned panel of guests, famous in the city, of course. First one is Neil Kimberley, who is a foreign exchange analyst, somebody I respect for his views and opinions and have done for quite some time. Neil, we're at a very special juncture here. Obviously, this is the first referendum after 40 years on the European Union. Before it was a referendum on the common market. But common market is all about trade. What does the city think about the common market?
The common market,
the EU.
The common market, as people voted for back in 1978, no longer exists. Of course,
it was a loaded question.
And exactly, the European Union is something that the British people have never had a chance to vote on, and their opportunity comes this Thursday. But as regards the city, you would have to say that over the decades, the City of London has benefited broadly from membership of the European Union, because although the United Kingdom has stayed outside of the Eurozone, the British government has managed, most recently with the support of the European Court of Justice, to put the City of London at the heart of Euro trading. ECB is planning, according to yesterday's Times, to move Euro clearing out of the UK if we vote to leave. At the moment, London clears a bucket load of euros, and a lot of jobs remain on the basis of that. You can understand why international banks love being in the United Kingdom, because they have a passport to deal into the Eurozone. At the same time, they have the protection of British law, and on top of that, they have access to the English language employees. We should never forget that. This is a key issue, because you've got New York and London. London gains for the fact that basically English is the lingua franca of the world.
But that was going to happen anyway. The London and GMT and the City of London was, let's say, the first major financial centre in the world. So it has that first mover advantage, let's say. But in recent years, isn't it the case that it's not so much being in the European Union which has benefited us, it's actually the failure of the European Union and the brain drain and the jobs drain from people fleeing the pigs nations and other places in Europe which are still in deep crisis, and coming to London.
I think there's an argument for that, in the sense that Britain, by being outside the Eurozone, has been able to plough its own furrow. That would actually be something that David Cameron would argue was beneficial for the UK and would be reinforced by his recent so-called deal with Brussels. Talent is attracted to the United Kingdom because the jobs are here. In the sense of the City of London is amoral. We deal with money. If being in the City of London...
I thought it was immoral, but you're saying it's amoral.
It's amoral.
It's
not immoral. I've worked in the City for many years. It's amoral when it comes to money. If being in the City of London allows multinational banks to operate within the Eurozone while having all the protections and all the benefits of being outside the Eurozone, that's a major plus for international banks. Hedge funds and private equity guys will probably disagree. A lot of that money has gone behind the Leave campaign, and I think their argument is that we will be if we leave, we become kind of offshore banking system. The two sides are diametrically opposite here. Will jobs leave London if we leave the EU? Undoubtedly. Will it become the deserted, the Marie Celeste of the financial world? I think not, because I think there's a lot of other reasons why people are in the UK. Simple thing: financial innovation under English common law is much easier than financial innovation under the Napoleonic Code. Napoleonic Code says if we say it's legal, it's legal. English common law says unless we say it's illegal, it's legal. That allows you to develop products in the City of London to sell into the Eurozone, covered by English law, which the whole passporting issue allows you to do. You can see why big banks want to stay, but you could equally see while hedge funds and private equity guys might think, you know what, we could do better outside, because we could be like the Virgin Islands off the coast of France.
But you think you think inadvertently, presumably after like the ERM crisis and not taking the euro and other issues like that, the financial crisis 2007 and 8, inadvertently we've actually got the best of both worlds rather than the worst of both worlds.
I think the Eurozone would argue that we've got the best of both worlds, and I think that actually opens the question is, if we vote to remain on Thursday, how long will the Eurozone put up with what in their eyes is a case of the United Kingdom having their cake and eating it. But the Eurozone itself has got to decide what it is.
Neil, yeah, you just referred to the deal that we have with the EU and the fact that if we do, well, the possibility that if we remain, they'll actually say, well, hang on, you've had it too good too long, and we're suffering here. We need to renegotiate.
But that's the issue Cameron would argue he sorted out, because he said if there is a further treaty change, which this would have to be, then the British people would be in another referendum to make the decision again. And I think that's the whole point. I don't think Thursday is going to solve anything, whether it's remain or leave, because I think the Eurozone is in a state of flux. But the members who want to go for closer economic and monetary union will go forward. I think it was Mr. Juncker who said, after one of the countries rejected the Lisbon Treaty, if this country votes yes, we will implement it, and if they don't, we will continue along the same path. They're going in a certain direction until the people of those countries say enough is enough. We may see some of that in the Spanish election this weekend. We may be seeing some of that in the city elections in Italy in the last couple of days. But the British, at the moment, are outside the Eurozone, within the European Union, outside of Schengen. The question for me is how long the Eurozone is prepared to go along with that special deal for those independently minded Brits. And if they want to change the deal, then we have to have another referendum in the United Kingdom. And then it will be interesting to see which side the government's on.
So Remain vote would cement the idea that things have to be rejigged and renovated, because the last time there was any vote on this was in 1975, and that was only a very small remit.
Exactly, and this vote is not about closer monetary and economic union from Britain into the European Union. It is only whether we stick with the deal that we've got now. If the European Union goes along that further path to even closer economic and monetary union, then under the terms of what Mr. Cameron has said, the British people would have to be consulted again because the goalposts will have been shifted.
But for now, Remain is the most pragmatic approach.
For the City of London as a whole, I think Remain is the most pragmatic approach, and I fully understand it, because if you're working as a multinational bank in London, you get all the advantages of the passporting allowing you to sell stuff into the Eurozone, and you have the incalculable benefits of the protection of the British legal system.
Neil Kimberley, foreign exchange analyst, thank you very much for speaking.
My pleasure.
Elliot, who is the trader at the Investors Chronicle, a technical analyst, and somebody I regard as the finest technical analyst in the land. What would you think about that assertion, Nicole?
Great intro, thanks very much. I'll pay you later, Zach.
Right, no need. Foreign exchange market will be in the eye of the storm later this week with the referendum vote. How would you play it, if at all?
One thing at a time. I'd say that all things UK financial markets have actually been relatively calm over the last 6 months, and there is rather a lot of media hype going on. So one thing at a time. Yes, foreign exchange has been the one that has attracted the most speculation, and I call it a lot of speculation going on there, and if it doesn't work out, then rip it all up and give up type thing. But basically, cable has held between $1.4 and $1.47 nearly all of this year. I mean, that's a 5% swing. I don't consider that a big move at all. Meanwhile, they're happily hoovering up cable puts at an astronomical implied volatility. It has actually peaked. It peaked already on the 14th. But that is just the market maker selling something that a sick person wants to pay an awful lot for.
So for people who don't understand put options, these options are the right to sell at a certain price. But the point with that is that the market makers, the people you're buying at the market stall, let's say, price them so high, the insurance policy is probably more than you'd actually lose if the worst happened.
Absolutely, it's like flood insurance. When the premiums get to a certain level, you've got to say, actually, I'm not going to insure my house against flooding. Yeah? And that's the level we had got to. So careful, let's separate out. The underlying market has not been that ridiculously volatile, But the options got terribly expensive because if you want to buy something desperately, the guy who's going to sell it to you is going to try to maximise his or her profit.
And do you expect the volatility to increase, or is it going to be a damp squib? I mean, it looks like we're going for the Remain outcome there. So that's it. I mean, it'd just be, Friday morning we'll wake up, stay in the EU, not much to talk about.
Well, I've been told that an awful lot of bankers have been tied to their desks overnight, whether it's here in London or
But
Frankfurt
lazy
or
people, somebody
wherever.
wants to get them to work, do some work for a change, I think.
Get their money's worth for a change, yeah. I would be very reluctant to take on a major trading position overnight. I really think it's really stupid because let's face it, who are you going to deal with? New York's gone home, the corporates aren't there, the big hedge fund guys are going to be, holding back, keeping their powder dry until they see the whites in their eyes and then shoot. So, do as little as possible overnight, then we get Wellington coming in and Sydney, Tokyo, Singapore. But try and do as little as possible. And if it's got to an extreme price, check with your banker and see if he'll lend you a little bit more money to tide you over for another couple of hours.
But I mean, Scott Sterling cable is at 147.5, something like that. It's near the top of the year range. Is there any price that you say, 150, 155? I'm a seller because it's gone too far.
Yes, I do think so. I'd agree with you there. That just for a very short term, in and out type, scalpel type trade, definitely. If you see the thing going absolutely sky high on zero volume, and that's important, check the volume. If it's gone, 3 big figures, 5 big figures on no volume, well, you've got to look at it and go,
On the other side, surprise outcome, people secretly voting for Brexit and the Brexiteers win. 130, 135, is there a level they say, well, there, I'm going to fill my boots?
Well, you see, as a technical analyst, I'd look at the chart. And I've just told you we've been in a 7-cent range on cable, haven't we? So if we were to break out on the downside, i.e. pound get weaker, you need fewer dollars to buy it, I would subtract 7 cents, and that would be my target, 1.33. Yeah, I think the danger is on the other way, right? In that we've spent I don't know how many years expecting the Fed to put up rates, and everyone has been positioned long of US dollars. It's got nothing to do with the pound, nothing to do with Brexit, but the world and his mother has been positioned for a stronger US dollar, and it hasn't happened. If it goes the other way and cable starts trading above, let's say, 1.5, the psychological level, I think there'll be a huge amount of stop-loss orders being triggered, of people completely rethinking their attitude to the pound versus the US dollar. And a really, really big surprising move that would be very costly for many. And let's not forget, foreign exchange is always a relative game, yeah? It's not an absolute. So we're not just buying or selling pounds. We're simultaneously buying or selling US dollars. So what is happening in the States is relevant and can matter a lot. And one of the ones I think we've got to seriously factor in now is the possibility that Mr. Trump could be the next US president. And I think a lot of people would balk at that.
And you think that the market hasn't actually doesn't even believe that's going to happen at the moment? It's not priced in at all.
Well, it's hard to gauge, but in my opinion, it's not. And it's another example of a rather complacent establishment type thinking that hasn't looked outside the box and thought, what if we're all wrong? Because they can't accept the fact that they might be wrong.
Well, on the referendum, we'll know very, very soon, and hopefully there'll be opportunities on the currency markets for that. Nicole Elliott from the Investors Chronicle, thank you very much.
Thank you, sir.
Okay, I'm joined here by Nicole Elliott, who's a technical analyst at the Investors Chronicle, and by Neil Kimberley, who's a foreign exchange analyst. I'm going to ask them both the same question about the referendum, well, same questions in fact. Nicole first. How do you think, what's your view on the way the referendum has been, the campaign has been run, and what's your ideal scenario for after June the 23rd?
My big worry is that the result will not be clear enough, strong enough, i.e. either the voter turnout will be too low to make it a resounding vote in favour or against, or that the margin between the remains and the leaves is so tight. And I cannot believe that anyone would design something like that, as important as this. It's a real, I believe it's one of the most important decisions that British people have had to make in a generation. I cannot believe that the whole voting process is so sloppy. It's quite frankly sloppy and cavalier. That is my big worry, that we'll get, you know, if we get a voter turnout, let's say of less than 55%, and a 1% between the two, well, you can't make a major decision on that. So that's my biggest worry. On a personal level, I'll be honest with you, I'd say I'd rather leave, but that's purely personal, and for all sorts of decisions of which the economy, finance, banking and the exchange rate is just, you know, the start of the issues that we're dealing with.
What's more important to you, because the Leave campaign is very much a sovereignty issue. It's who governs Britain, like the old Ted Heath slogan. It's more a philosophical standpoint, whereas for Remain it's all about numbers, and if you do this you'll be £2,000 a week better off or worse off or whatever, or, you know, that financial aspect. Is it and then there's the heart and the head type of contrast as well. Is it money or is it principle?
I'd say it's over principle, really, but there are money issues there as well, and the glaring one is that the Eurozone is not doing well, and that there are a whole load of other EU members that are very weak and not up to scratch. They're just not up to our kind of standards. So, do you know what I mean? Do you want to be shackled to the weak and the poor and the useless? Or would you rather get going, get cracking, and have a stab at it and do your utter best, knowing that you really believe in what you're doing? And that's why it's so key that you have a clear-cut vote.
It's interesting that
really believe in it.
In the campaign, neither side have really, let's say, trashed the Eurozone economic project. It's more been about the political agenda of the ever closer union, so maybe the Leave campaign would have done better saying, well, the whole thing is falling apart. They didn't even mention Greece very much either. So the economics of that has not really been emphasised.
No, maybe it's because they're frightened that if we get stuck in with it all, then we've got to sort of backpedal and grovel to these people we've just trashed, you know.
Right, Neil, same questions to you. What's your view of the campaign? What's your ideal result?
I think the campaign has been fairly limited. There are no facts. I think voters have to make up their mind on the balance of risk, and as I have a inbred trading mentality, I will vote with my wallet, and I am therefore edging towards the Remain camp. I'm actually on the opposite side from Nicole. I would like a close result either way. I think if it's a close result on the Remain side, that gives the Cameron an opportunity to push forward with the European Union and say, look, listen to what the British people have said, I've got this through, but only just. If you don't do the kind of reforms that a substantial proportion of the British are complaining about, the whole thing is going to fall apart. If we have a small majority to leave, I think that allows Cameron or whoever's Prime Minister to say, look, the mandate is there, it is to leave. Nevertheless, it's not a massive mandate, therefore we'll go softly. There's this 2-year rule under the Article 50, but the Article 50 rule only clicks in if we activate it. Grayling on the Leave side said, look, I can see us leaving in late 2019, which would infer that the government, a Brexit government, would not invoke Article 50 for 12 months from now and then gives it another 2 years to run. The narrower the vote, the more flexibility they got in starting negotiations, and the more likely, in my opinion, that the European Union might go, you know what, we really don't want you to go. I know, here's another deal, have another vote, have another referendum. The second referendum idea that Boris Johnson mooted in the first place. As regards the Eurozone, we're not in it. It's not my problem. This is the City of London, we make our money. The banks got their passports into the European Union as a whole, the European Union. ActivTrades is dealing across the Eurozone. It's in everybody's interests to maximise or continue to have access to that market. If the Eurozone goes down without us being in it, we're going to have a problem, but we wouldn't have the problems that they're going to have because they're in it. If we're not in the European Union and the Eurozone goes down, we're still going to have a problem because we're so closely linked to them anyway. When Ireland went pear-shaped a few years ago, the first country to step up with a bilateral loan was us because we got such a close relationship with them. We're not immune to the Eurozone's problems, whether we're in the EU or whether we're down.
Well, that's the other thing. I mean, one of the reasons for leaving is that we won't have to pay the bill when the Italian bond market collapses, or the Spanish property market does this, or Greece finally can't even pay the interest on the interest on the loans, the sub loans that they've already been given. So, isn't there just a big liability there?
The liability is there regardless, but at the moment, under the terms of the deal that Cameron negotiated, we are not on the hook for more losses within the Eurozone. Now, whether you believe him or not, or whether the Eurozone can actually cope in the long term without British money is a different issue. I suspect the Eurozone, in the fullness of time, will not be able to live with Britain having its cake and eating it. But for the moment, we are where we are. And it seems to me on the balance of risks, and specifically for the City of London, and the taxes that the City of London pays to HMRC, the balance of risks argues for a Remain vote, but not a convincing one, because we don't want the European Union to think they've got a clean slate and they can do what they like.
Finally, Nicole, the result comes through on the Friday, June the 24th. Would that be that's it for you? I mean, once and for all, you just accept it and just get on with your life, or would you still be thinking on the sides? How do we get rid of these people?
Well, I won't be seething because you've got to go along with whatever was decided democratically. But I don't think this is the end of it all. I see this as a global issue, and then let's not forget we've got Spanish elections on the Sunday. So, do you know what I mean? You've only got a day's grace, and then we've got the whole thing coming up again with a combination of very, very angry Spanish people fed up with the status quo. You've got separatist issues there as well. Certainly recent polls in France and Italy have come out showing a huge amount of people, not a majority, but a huge amount of people in those countries wishing they weren't in the EU either. So maybe the merry-go-round just keeps going round.
And for the FTSE and for cable, higher, lower, the same, just putting you on the line there.
I think stock markets generally are more likely to drop a bit rather than rally, and it's nothing to do with Brexit. It's just the global scenario that has these storm clouds that have been building now for months. So that is always there in the background. So stock markets down a bit. Pound, the most interesting one to watch is against the euro, I'd say, not against the dollar. How is euro sterling going to pan out? Are they going to be focusing on Britain's weakness were it to leave, or euro weakness were one of its bigger players to leave? Obviously it's not going to fall apart, but you know, when you take the queen out of your chess game, you've got a problem.
So 70 pence rather than 80 pence, which was the recent peak, let's say.
Something like that, yes.
Neil, any market view that sticks out for you, or a market that sticks out for you, a market view that you want to...
I think you've hit the nail on the head on euro sterling. I think there is a massive pent-up demand from central banks around the world to buy UK assets, which has been on hold because of the referendum campaign. I think the real yield on UK 10-year UK gilt is compelling compared to anything that you're seeing within the Eurozone among countries that Far East central banks have credit lines for. Germany, Austria, the Netherlands. I think there's a wall of money that's been waiting to come into the United Kingdom, waiting on this referendum. I suspect that obviously if we get a Remain vote, it will be strong for the pound. I think also that if we get a Leave vote, although the market will immediately sell sterling, and that would be understandable, I think there's plenty of people out there who are looking to buy UK assets. The property rights, the legal system, the attraction of owning a home in Moscow on the Thames is not going to go away just because we left the European Union. And if euro sterling does pop up on the fact that there's a general sterling weakness after a Leave vote, I will be selling the euro, because if you sell the pound on this, you should sell the euro, because they're not going to be in a great state if we've left.
God save the Queen, I think is the right emotion there from you, Neil. I didn't know you were such a patriot, but Neil Kimberley, foreign exchange analyst, and Nicole Elliott, a technical analyst at the Investors Chronicle, thank you very much.